For most retail investors, the day started with a familiar sense of optimism. If you were tracking standard indices like the S&P 500 and the Nasdaq, you were looking at a market riding a steady bull run. But during the afternoon session, the cybersecurity sector suddenly broke rank. CrowdStrike fell nearly 6%. To find the source of the drop, we have to look past the trading floor and into the research labs where this disruption is being coded. The panic began with a leaked report about a new, highly advanced AI model from Anthropic, operating under the name Claude Mythos. This report showed Claude Mythos achieving exceptionally high scores on cybersecurity diagnostics. It wasn't just generating text, it was identifying and neutralizing network threats with machine precision. This raised an immediate concern for investors. If an AI can perfectly detect and neutralize threats automatically, the demand for traditional subscription-based cybersecurity services could dry up. Traditional cybersecurity relies on a labor-intensive perimeter. It requires human analysts to manually inspect every data packet. In contrast, an AI acts as a self-updating instant reaction system. It vaporizes malicious packets before they reach the firewall, moving at speeds humans can't match. This sector-specific anxiety was amplified by a broader market plunge that same day, as geopolitical uncertainty pushed investors away from risk. Wall Street's reaction suggests a shift in how investors value these companies. If pure AI handles the core work of security at a lower cost, legacy firms face intense pressure to prove they provide unique, necessary value. The biggest player caught in this crosshair is CrowdStrike, but the company isn't standing still. At their Falcon 2025 conference, leadership laid out a counter-strategy designed to address the AI threat before it could erode their market share. Their first move was to acquire the competition. They bought Pangea, a firm that specializes entirely in AI-driven security. They also introduced risk-based patching. This feature uses AI to automate vulnerability fixes, effectively integrating the very automation that investors feared would replace them. This chart shows how confident they are in this pivot. While analysts expected 14% growth in net new annual recurring revenue, the predictable income from their subscriptions, CrowdStrike projected growth of over 20% for 2027. Their long-term target is even more ambitious, reaching $20 billion in recurring revenue by fiscal year 2036. CrowdStrike's strategy illustrates a common survival tactic for legacy tech. Rather than fighting the AI wave, they are attempting to acquire it, integrate it, and deploy it faster than the newcomers. To understand if the panic is justified, we have to look at the macro picture. CrowdStrike stock is naturally volatile. It has moved by more than 5% 13 times in the last year alone. There is no denying the current decline. The stock is down nearly 19% since January and is trading 33% below its 52-week high. But there is a massive difference between a short-term drop and the long-term reality of holding a high-quality stock through a technological transition. This chart shows the 5-year trajectory. If you had invested $1,000 5 years ago, that investment would be worth $2,121 today, even with the recent sell-off factored in. While AI models like Claude Mythos are forcing a rapid evolution in cybersecurity, the resulting market panic often creates the best opportunities for those who understand the long game.